All right. April 24th, that's a Wednesday. Couple minutes after the open, we had a little bearishness that came in. Let's play it. It was more neutral as far as we were concerned, right? Neutral to bullish early on. Doesn't mean you come in and buy it. Comes in and watches for any kind of anyone that might be stuck with some market relationships that make it even better. So right after the 8:30 Central Open, which was at 36 even, the market just a couple minutes after that open showed some aggressive buying that come in, and I believe it was 35 half. And I said at the moment, this guy is in trouble right away. He's buying 35 halves, and this thing doesn't even budge 35 half trade. It's trading 35 quarter, a tick below it. And sure enough, we broke a good couple points, but it came back. It wasn't a winner type trade. It was a winner scratch type idea or trade. I don't want to miss it here because I think it happened at 35 quarter, and the green went away. So let me play it and show it so we could capture it. Didn't happen yet, I don't think. Right now we just open up. We go down slightly, and we're chopping around. We open up at 36. We go down slightly to like 34 half. We came back. I think we came back up. And I'm pretty sure that was a 35 half price, if you guys remember. But this market dropped quickly after he got stuck. And just remember, for people that these videos go up to YouTube, you might not understand a lot of the concepts or techniques. But opposite conventional wisdom is always something that's going to give you an edge in this business. All right, so it comes back up to the open, tests it. So I want you to watch 35 half down here in the corner here. Just watch when it lights up green in a second. We come off 36 quarter. I think it comes in here where there's an imbalance of aggressive buyers versus aggressive sellers. But when you quickly look at your dome after you see it go green or go red, and they can't even budge this thing bid, which means 35 half stayed offered. It's like right there. I paused it. You see it go green? What this means is when the 35 halves are offered, a lot of people buy it versus sell it. When it's 35 quarter bid and 35 half offer, quarter half is the bid offer. A lot more people are aggressively buying the offer than hitting the bid. Why is that important? Because the market should go from offer to bid, at least go offer to bid when people jump in and buy it really quick. Just think about that. When it does, great, supposed to. When it doesn't, it gives you some downside probability. Then if you could line it up with an ancillary that's also ready to break out to the downside and you're bearish, it'll get you short. If you're bullish, it'll keep you from being long. If you're neither, it could get you short. But watch what happens. Now, you could look at your dome and see that it stays 35 half offer. Then he comes in trying to buy the 5 quarters, I believe. Watch how it quickly slips 4 ticks. And in my opinion, in a market like the S&P E-minis that's thick and liquid, if you get a 4-tick effortless trade a lot and you can't make money, we got to get your head examined. And I'm not saying that it's easy, but if you could constantly get 4 or 5 tick head starts and you're not making money, I mean, there's something wrong because it's liquid enough to trade bigger, to take something off. Not trade big, but trade bigger. And when I say constantly getting 4 or 5 tick head starts, that means a lot. Not 50% of the time, but a lot. You're getting 4 or 5 tick head starts, and you're not taking winners. That's in a market that's this liquid. That's a good head start. So this drop didn't just happen out of nowhere. It was predictable. There was some probabilities, and it's less random when you're using these edge zones and reading order flow the right way. Now, let's pause that because it came back. It didn't work for 10 points, right? It didn't work for 20 points. It worked for 6 or 7 ticks, but it gave you a head start, stripped out the randomness. Now look at the NASDAQ at the same time. After their 8:30 open, which I went too far back, which is right in here, Where is it? Right there. What it did, and it didn't go down that much, but it got through. Is this the right day? No. Oh, maybe it was. Where the heck was this? 8:30. 8:34. Right. This is it. This is the right day. The look at this NASDAQ. We don't know about any of this stuff. I don't know about any of that. Neither do you. But what I do know at this point is it's got a consolidation box right there, and it's got the middle of the consolidation box. The same time you got those 35 halves to get stuck, you got this NASDAQ going through the middle of this box. So keep an eye on other markets. Keep an eye on what consolidation boxes are, what the middle of them represent, what buyers, when it can't go up, and sellers, what it can't go down means. Now you're being able to take order flow and intermarket correlations, market relationships, drive them together, and those are the two things that have to be part of a winning strategy. I don't care how long you trade, how much money you made, how much strategy that your time frame is. It doesn't. If you've been successful, you have elements of market correlation and order flow part of it. Period. End of story. And so compare two markets. In this case, the NQ to the ES. Buyers stuck. When buyers are stuck, they look like this, and they're worried. Big grapefruit eyes. This YouTube video we put up every day, so subscribe to it. If you got questions, put them in the comment section.